Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin and the battle for 20K. So if you guys like the content, please subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So we're looking here at a linear scale. Obviously, we tend to look at logarithmic scales because they're good in terms of looking at orders of magnitude moves over very long periods of time. But again, they can sometimes hide just how far Bitcoin has come. Now, the battle for 20K is going to be a significant battle, right? Not just, I mean, 20K is sort of that magical number, the elusive number that Bitcoin was not able to reach back in 2017. And, we've talked a lot about, quote unquote support, resistance, that type of stuff. And you guys know my general feelings on that is that Bitcoin really doesn't have to respect much of any of that stuff. Just like back in over here, there were a lot of people saying that 6K was going to be a huge resistance area, and then Bitcoin just blew through it like it wasn't even there. And the obvious argument was that, well, 6K seems like it should be because of that, the general support it had found. So the idea is, okay, it should be theoretical resistance. And we've contended all along that, Bitcoin, because it is prone to these bubble-like features, that, these support and resistance areas are not always that important. However, when it comes to getting above the prior all-time high, I would say that that is a pretty important level. If you're going to define what a critical level is, it would be, is it above the prior all-time high or not? And one of the reasons you think of that is because, again, it was the elusive number that we could not quite reach last time. We also know that a lot of altcoins tend to go absolutely crazy, historically speaking, when Bitcoin does get to its prior all-time high and at least move sideways. If it goes to 20K and then 10 minutes later it's back down at 19K, then altcoins are probably not going to immediately rally. If Bitcoin were to then stabilize at 19K, they might. But if Bitcoin gets to 20K and it instantly comes back down, this is still not that great for altcoins in the short term, right? We know that if Bitcoin moves sideways at a stable area above the 20 week or a bullish area above the 20-week moving average, then the chances that altcoins rally are pretty high. Just a few days ago, we saw this happen where Bitcoin was moving sideways for a little bit and Ethereum started to rally and a lot of other coins started to rally. But then Bitcoin decided to take the show back. And when Bitcoin wants to take the show back, it's going to do whatever the hell it wants to do. So when we talk about 20K, this will be a significant level. And you also must realize that the first time we break it, which might not, I mean, it could be today, it could be tomorrow, or it could be in 6 weeks, or it could be in 3 months. I don't know. But whenever we do break it, it probably won't be the only time we ever break it. And what I mean by that is there's a good chance that once we do break it, we might hold it for a little bit, but there's a really strong possibility that we come back down below 20K for a bit, and then the next time we rally above 20K, there'll be a little bit more confidence in terms of, okay, this 20K is a little bit more sustainable. Now, one of the things I wanted to do is switch back to a linear scale, and I want to take a bar pattern from basically this capitulation down here to the top, and just show some similarities between these two types of bubbles, right? I mean, they're basically identical if you, and the reason why I'm putting it here is because you could argue that this, right, is just more of a black swan capitulation, and we might just say that, let's suppose that we just didn't have that, and instead the price just kind of went through here, right, and we didn't have these little bunny hills and little valleys. So if we go back to this level, which I think a lot of people would agree was a reaccumulation level, and when we're at that level, we talked about it being a reaccumulation level and not just a simple distribution level before going back down. And if you overlay this accumulation level over here with this one, and overlay those bars, it basically takes you to where we identically are. And we all remember 2019. This was a pretty impressive move, right? This was a pretty impressive move. We went to 14K, and then we went all the way back down to $3,800. Okay, now we rallied all the way from the 9 to 10K region all the way up to to almost, I mean, we're currently at 19.2, but you guys get the idea, right? We're looking at pretty similar moves, right? This one went from around 4K up to 14K at the top. This one from down here, started maybe around $8,500, $9,000, and currently it's all the way up here at around $19,000. So pretty similar moves. We've seen this type of euphoria in the market before, and this is exactly why we're here, right? It's because these short-term bubbles exist. And when we talk about short-term bubbles, we're not talking about like the macro bubble that we expect Bitcoin to go to over the next few years. We're talking about a short-term bubble that we've had many times in the past that will probably have a correction at some point back to the 20-week moving average. We just don't know exactly when that will be. And you can see during the last market cycle, if you look at time spent between tests of the 20-week moving average. So if we go take a measured move here. Sorry, I'm trying to find this one. So if you go back and look, the time between tests of the 20-week moving average. So here was one we had about 91. I think it was around 91 days, 84 days, depending on exactly where you measure it. Leaves here, it's around 70 days, depends on exactly where you measure it from. Here was another one. This one was around 84 days. This one was around 63 days or so. If I actually go to this test and go back up to this one, we're talking about 91 days. Note that this was a basically continuous test here. And then from here, it was 91 days to the next one was about 70 days. So you can see that most of the time between tests of the 20-week moving average last market cycle were about 2 to 3 months. Okay, and if you go to the current market cycle and measure this out, we can see that from here we got above the 20-week. We sort of tested it again 84 days later. And we're not just talking about the 20-week, we're talking about the bull market support band, which also includes the 21-week EMA. So you could say, okay, we've moved up, went into the 21-week EMA that was 84 days later. We came back down to it about 42 days later, so about a month and a half. And then we left it here. And so far it has been 56 days. So if we were to see something like prior cycles, then we would expect to test the 20-week moving average again within the next month or two. Okay, within the next month or two. Currently we're at 56 days. If we were to go out another, say, 3 weeks or so, another month approximately, we could be looking at retesting the 20-week in December. We have had some longer times in between 20 weeks. So, I mean, it could also be early January, early February. We need to recognize that the 20-week moving average right now is moving up by approximately $400 per week. And that's because if you go take a measured move from where we currently are and go back 20 weeks ago, we're replacing around $9,000 with $19,000. If you take the difference there, divide it by 20, you get about $400 a week. So at least for the immediate term, we would expect the 20-week moving average to go up by about $400 per week. If, however, the price of Bitcoin does not continue on higher, then the 20-week moving average will not increase quite as quickly. And that's mainly because as we start looking after we get past this move, we're going to be replacing, say, $12,000 with $19,000 if, in fact, we don't rally above it. Or if we come back down, we'll be replacing it with an even smaller number. And in that case, the 20-week moving average might only be increasing by $200 or $300 a week. The reason why this is important, of course, is because we know that the 20-week moving average is our Bitcoin bull market support band. This is where corrections go to, and it's something you should always keep in the back of your head. Right now, the 20-week moving average is at 12,900. The 21-week EMA is at 13,481. So this would be the critical region to keep an eye on in the event of a correction. And remember, if we fall down to this, if we do have a correction, the bull market is still intact as long as this is not broken. As long as we can maintain the integrity of the bull market, as long as we don't break this bull market support band. You can see that last week we had a correction all the way down to around 16.1, but it was still well above this. And again, sentiment can change on a dime just because we're still very much in bullish waters. So the 20-week moving average will be a critical area for us to watch. We will probably have a long extended subsequent tests of it. I'm not saying that, we can obviously just break through it, and then if we get above 20K, it's not that hard to imagine it to continue to push higher in the short term. But what I'm saying is in the grand scheme of the market cycle, when we look back, the probability of us spending a lot of time testing this region, coming back down, is pretty high. It's an exciting time. Hopefully, you're on the right side of history in terms of where you're buying Bitcoin at the lower prices, or are you going to be that guy that's going to come in later on and be buying Bitcoin at like 100K or something in a couple years or 3 years, whenever it comes, right? This is the idea. Are you going to be the guy that has been purchasing it at lower levels within our regression band that we've been talking about? And we said for a long time, right? Whenever we leave this band, there's going to be a lot of people that are looking at Bitcoin up here and wishing they could have bought it back here, right? We said this. So if you were the person buying it down here, just recognize that it was not luck. It was a calculated investment, and it paid off. So we'll obviously keep an eye on the 20K, because this will be a defining moment in Bitcoin's history. Now, I know on some exchanges you could argue that it's already broken the prior all-time high. That's not the case for every exchange, because we also know that 20K is not really the prior all-time high. It was just shy of 20K. I do think that 20K will be the number to get to in order to see a sustained rally and to see Bitcoin start moving a bit quicker again. 20K will offer, in my opinion, it will offer a bit of resistance, whatever that means, right? So we'll keep an eye on this. We'll probably do a live stream later, so make sure you guys tune in for that. Bitcoin's currently at 19.3. I want to remind you guys, in the same way we're calm over here when Bitcoin's not doing a whole lot, we want to remain calm, because if in the event that we do break past 20K and start going up quickly, and then the micro bubble extends higher, this could be a key opportunity that we would want to take advantage of. And in the event that we come back down and maybe test the 20-week moving average, then that's an event we would want to take advantage of. Remember how you feel now at 19.3. If we go back to 14, 15K at some point, remember how you feel and how you might wish you had more Bitcoin. Also, remember how you felt 6 months ago at lower prices before we had this rally, so that if we ever do come back into the regression band, see it for the opportunity that it is, and don't get too worked up about these short-term price moves. It can turn stomachs, of course, but recognize how quickly things can change. From the bottom, if you measure this from the bottom of the wick, Bitcoin is up about 400% since March. This is quite substantial. So if you guys like the content, make sure you subscribe to the channel. We'll do a lot of updated videos here. But also, we do have the Black Friday deal going on. I would encourage you to check it out. It'll go on for about 1 more week, and you can lock in the lower rate to the premium list. On the premium list, you get access to a lot of these trading view indicators. You also get access to the regression rainbow that we like to look at. And you also get access to the alerts channel on Telegram, the private Telegram chat room, the risk dashboard, which is what I use to trade, just mathematically, systematically, be pragmatic about the investment, don't get emotionally attached. That's what I use. And then there's a few other things. So make sure you check out the Black Friday deal. You can find a link to that in the description below. At the very least, make sure you subscribe to the channel, give the video a thumbs up, and check out the Telegram channel in the description below. Thank you guys for tuning in. Exciting times ahead. Let's stay level-headed, let's stay focused, and make some money. We'll see you guys next time. Bye.